Hey guys, Eric here, Mr. Fired Up Wealth, and today I bought NetApp stock, and you're going to want to watch this video to find out why I bought it. This thing pays a 4.5% dividend yield. It's basically an income stock, but it has growth upside potential in cloud services and the stay-at-home economy. Are you kidding me? You're going to want to watch this one. Stay tuned. Okay, so we hear a lot about comparing today's market to the dot-com crash, and I'm probably one of the few YouTubers around that was investing in technology stocks that long ago, back in the late 1990s. So if you do recall, if you were trading back then, you would have heard of a stock called NetApp, and it's still around today. This is the NetApp chart, and you can see back in 2000, it actually had $127. And today it's trading at $43.77. So you say, well, why are you showing me this? Well, it is one of those stocks that basically was part of the whole dot-com crash, and they've grown into a mature business with legitimate cash flows and earnings. And I mean, just look at this, guys. I did some screening today. I was doing some screening for some high yield stocks, and I wanted something that still had some growth, or at least potential for upside growth. So I'm not saying that this stock is going to, be your next biotech play and make you 100% overnight. That's not what this is. This is mostly income. This pays a 4.47% dividend yield. And I will say, I do want to have full disclosure before I go any further, that I've got two close friends who are in sales that work for NetApp that joined in the last year or two. And I decided not to talk to them directly about this because I didn't want to put that pressure on them, and I don't want to get any, information that I shouldn't get or what have you. But one thing I can tell you is that both these guys are, they're unparalleled. They're top notch. They're best in class, and they wouldn't be at this company if there weren't good things going on. So that's the first thing. This has been on my radar for a long time. I finally put enough homework into it and decided to buy the stock today. So I actually own some shares. I'll probably add some more if it dips, but I added a decent position today, even though it's actually up about 1.5%. So I bought in around $43, $43.50, somewhere in that range. So NetApp, look at this thing. So 4.47% yield. The earnings per share growth history for the last 5 years is 15%. That's really solid. The dividend growth, the actual growth of the dividend is 21.67% over 5 years, which is amazing. The PEG ratio is a 199, which isn't bad. And the PE is a 12.4. So if you're a value investor trying to get into the technology space, try to play the cloud space, these guys do exactly that. They've grown from just data storage to really a cloud niche player. And I'm going to get to more on that in a second because they've had some key acquisitions. So the other thing I wanted to point out, earnings per share. So the earnings per share, 3 to 5 year LTG is 7.88%. So if you do a screener on Fidelity, there's only going to be a couple stocks that fit these parameters. I didn't want a high dividend payout ratio because I want them to still invest in the business and grow. So 53.57% is a little higher than I usually like, but it's still pretty low when you consider a 4.47% dividend yield. So let's jump into this. You're going to want to see this because there's a lot of great information. Please stay tuned. Now, NetApp has actually made a couple of key acquisitions here recently, and I'm going to get to those in a minute. But I want to focus right now on this one because it just closed today, July 13th, 2020, a company called Spot. And if you haven't heard of Spot, they do ADIs. It's a very good play. I think it's a very key acquisition. Here is the company profile for Spot. So Spot was founded with a vision to revolutionize the way companies consume cloud infrastructure services using analytics and automation to deliver the most reliable, best performing, and most efficient infrastructure for every workload on the cloud. So these guys have some key partnerships, and they've got a really good background. It says the seeds of the vision were planted over a decade ago, and the founders were members of the cloud infrastructure unit of the Israel Defense Forces, IDF. So since delivering our first product based on that technology, our team has been busy helping customers save up to 90% on their computing costs, from Amazon Web Services to Google Cloud Platform to Azure, from web applications and containers to big data. Our growing product portfolio is helping to fulfill our vision of changing the way that companies run workloads and applications in the cloud. That's good stuff, guys. So this is cloud services. I wanted to go backwards 1 second. So What is the market cap on NetApp? It is $9.4 billion. Now, you can see back here again, this was $125, $127 back in 2000. It crashed. It's traded now at $43 and it's really grown into that valuation. Well, this is something that's really important. This is the last earnings call. It's from May 27th, 2020. And I just had an opportunity to read this over the weekend. I've been busy with other stuff, but I wanted to read through some of this stuff. So number one here, in Q4, this is from the CEO, we achieved our target of adding 200 primary sales headcount 1 quarter ahead of schedule. This additional sales capacity has enabled us to close coverage gaps and to dedicate resources focused on new customer acquisitions, finding new clients, greenfield. As a reminder, we funded this headcount by making trade-offs in the business, not by adding to the company's total operating expenses. That is awesome. So basically, you're not blowing a bunch of money to hire these salespeople. You're making internal efficiencies work to get that money to hire more headcount and probably bring in more revenue. I mean, 200 salespeople, they probably should sell some stuff, right? And one of the guys that actually I mentioned earlier is a manager on one of these teams. And again, I haven't talked to him about any of the strategy behind closed doors, but I know he's really good at what he does, and I'm sure that he's going to put together a great team and they're going to crush it. We made tremendous progress in our cloud business FY 2020. As noted last quarter, we achieved general availability in all leading cloud providers. We mentioned the 3 earlier. NetApp Cloud Volumes is the #1 shared file storage platform available in all public clouds. When you think of public clouds, you're talking about AWS, Google, Microsoft. Our intellectual property is embedded in every region and data center. So these guys are into data center. We were named the Google Cloud Technology Partner of the Year for infrastructure. This is NetApp. Azure NetApp Files is Microsoft's shared storage platform for primary workloads. SAP, another huge company, German-based, high-performance computing database. Windows Virtual Desktop, and Azure VM Services. So these guys are in all the big names. Azure continues to be a good source of new customer acquisitions, with more than 40% of NetApp file customers being new to NetApp. So that's really good. In the past 2 months, we acquired Talon, a provider of file caching software for remote and branch office workloads, and CloudJumper, a provider of virtual desktop in the public cloud. We've added these services to our cloud offerings to deliver a comprehensive modern workplace foundation for all companies, from born in the cloud startups and small business to the largest global enterprises. We're excited to include these talented teams in the NetApp family. Okay, so what this is saying is they're making a strategic move to try to capture even more revenue on this work from home environment. You know, we've added these services to our cloud offering to deliver a comprehensive modern workplace foundation for all companies. They're talking about big and small. Okay, I want to cover this slide really quick. It has some good information on it. So this is the Q4 FY20 results. On the left-hand side, I want to focus on the right-hand side, but before I get there real quick, the revenue is $1.4 billion. Out of that, product is $793 million. The software maintenance is about $267 million, and the hardware maintenance and other services is $341 million. What I really want to focus on, though, is the cloud growth and the revenue there. So on the right-hand side, you've got the product highlights. The all-flash array business is $2.6 billion. That's a 12% increase quarter over quarter. There is a lot of competition in that space, and that's still their primary business, as you can see. But it's a very, very healthy business. It's got great margins. But let's look at the cloud data services. So that is $111 million ARR, which is, not a huge amount when you're looking at a $9 billion company, but it's 113% growth year over year. And on the private cloud, they have a $408 million run rate, and that's 19% increase quarter over quarter. So I'm seeing some good things here on the cloud growth, which is a focus for them right now. And I definitely think there's a lot of upside opportunity with this. Real quick here to give you some more background on NetApp and what they do. They call themselves a leader in hybrid cloud data services, and they've got a mixture of different products, simplifying data services across your choice of clouds to accelerate digital transformation. So they're one of the companies that are focusing on that whole, kind of cliche word that's being used over and over again. It's digital transformation, but legitimately these guys are an important part of that. I see COVID actually helping this company. It's a company that's kind of been forgotten over the past, several years. You can say 2 decades, and it just kind of has been sitting there. I mean, again, you look at this. If you look at this chart, I mean, back in January of 2007, this thing was $37. It's literally traded in a range here for a real long time. It went up to $85, $86 here basically in 2018, kind of crashed down. But just in the beginning of this year, you were looking at almost a $60 stock, and now it's trading at about $44. So pretty inexpensive. But back to this, so $6.1 billion F19 revenue, 10,000 plus employees and 110 offices. Their portfolio. So customers looking to transform with cloud. Only NetApp offers data services across the world's biggest clouds, from Microsoft to Amazon to Google. Customers can choose the cloud resources that are best for their workloads and simplify the complexities of managing data across multiple cloud and on-premises as well. So they do on-premises and cloud. And I just thought this was really good. Here's some of their partners. So Accenture, AWS, Microsoft. So you got Red Hat, that's IBM. IBM has a separate logo, but Red Hat's obviously owned by IBM. SAP, all the major ones here, even Cisco's in here, Cognizant. So real good partners, world-class partners. You can see on their homepage, when you go to their homepage, Spot by NetApp, more cloud, less cost. They're really pushing this home. You go into products and services, the first thing you see is cloud services, then hybrid cloud infrastructure, then flash storage. Predominantly you would have thought of this company as cloud storage. And if you ask somebody, hey, what does NetApp do? They might say, I don't know. But anybody that's been around for a while will probably say, well, they do flash storage. And they do flash storage, but look at all the things that they're trying to diversify into. All right, guys. So the stock ticker on this one is NTAP. And you can see, again, the 4.5% yield, 12 PE ratio. You can see the chart here. It's actually down 28.77% on the 52 weeks. So it's gotten beat up pretty bad. This last earnings was pretty good. It actually beat by 15 cents. It did miss at the end of 2019. It missed by 2 cents. You can see the dividend yield strength is pretty strong for the market median of 3.29%. These aren't always right, but if you look at the fundamental analysis on Fidelity, the valuation, it shows it undervalued, shows the quality very high, financial health very high. The only thing it shows is low growth stability. Now, again, this stock to me is going to be an income stock. So it's not a growth stock. It's an income stock that's going to pay you a 4.5% yield. And it's one of the few stocks out there that has pretty strong growth and opportunity, I think, for upside potential on growth that's paying that high of a yield. You can go buy AT&T or something like that and get a higher yield, but the growth upside, I think, is limited compared to a NetApp. And then if you look at just the technicals, and this isn't always right either, guys, but it is fun to look at. This is, again, from Fidelity. This is from Trading Central. And on the technical outlook, it's showing that there's a short-term rebound towards $52.60. I got in here this morning a little over $43 a share. If it drops, I'll dollar cost and add more. I've got about a third of a position. I went a little stronger than I normally do because I like it here. The RSI, it says that it's actually neutral at about 50. To me, that's actually pretty low. There's just not a lot of trading going on. This is one of those forgotten stocks that's been just sitting there doing nothing for the past couple decades. But this is showing that, short-term rebound towards $52, below $39.40, expect 35. So this is saying if we drop below $39.40, they think it's going to go to 35 and maybe even 32. That would be a screaming buy opportunity for me. I like the upside potential. Again, this is an income stock. It's going to be something that's going to give you a 4.5% yield. It has some growth potential upside. And when you're looking at what's out there, there's just not a lot of other stocks out there that are going to give you this much yield with potential upside growth. So hope you like this video, guys. If you haven't subscribed, please do. Hope you have a great rest of your day. Take care.